Now that China appears to be behaving itself on the currency front and the dust is settled, at least for this week, with the averages roaring back today, it's time, I think, to do some shopping for some high-quality stocks while you can still get them at a bit of a discount versus where they were trading just a week ago. That's why today I want to circle back to some companies that had the misfortune of holding their IPOs right before the trade war-inspired meltdown. Not unlike, by the way, what happened to Uber, where you also had that kind of meltdown after, and people just freaked out. I'm talking about a pair of digital healthcare companies that came public in the same day, roughly 2 weeks ago. Livongo, that's Livongo, Livongo Health, LVGO is the symbol, and Health Catalyst, HCAT. Now, both IPOs spiked right out of the gate. But once the market got hammered, they came right back down. In other words, you're getting a second bite at the apple. Although, with the way that they're bouncing around today, it's a smaller bite than I would have liked. Let's take them one by one. Let's start with this Livongo. This is a technology company that helps people with chronic illnesses manage their diabetes, their conditions, especially diabetes. It's basically a personal health platform. They use smart devices to monitor your data, and then they actually show it to doctors. So for diabetes, you're already checking your blood sugar levels multiple times a day. Livongo monitors those numbers 24 hours a day, 7 days a week, and they give you advice based on what they're seeing. It's like having a personalized digital health coach. Because they have a huge data set, they know how to nudge you towards a healthy lifestyle. Now, the company now does the same thing for hypertension, prediabetes, and obesity, among other conditions. And based on its evidence, it works, meaning Livongo delivers better healthcare outcomes at lower costs. Isn't that what the system needs? Crying out for that, right? Makes sense. An ounce of prevention is definitely worth a pound of cure. And that's why all sorts of employers and health maintenance organizations are willing to offer Livongo for free. Now, they pay up to $60 to $70 a month per person, then end up saving a fortune on actual coverage. Their clients includes 4 of the 7 largest health plans in the country. This is the real deal. This thing just got overlooked. Sure, for many Americans, we don't really have a functional health care system, but Livongo's got an app for that. How about the numbers? Last year, the company's total clients nearly doubled. Their enrolled diabetes patients increased by 111%. And in the most recent quarter, was 140%. That translated into 157% revenue growth in the latest quarter. Yeah, 157, up from 122 last year. And Wall Street loves accelerating revenue growth, or ARG, even if the company's a long way from turning a profit. No wonder the stock spiked from 28 to 40 and changed the morning it came public. Livongo, I'm mispronouncing, peaked at $45.68 last week. Thanks to the market-wide sell-off, it's now back down to $33 and change. Even here, the stock isn't cheap, selling for 9 times next year's sales estimates. But given that it's growing at a 100% plus clip, I think that's a justifiable valuation. Don't buy it all at once, though. If you like this one, you need to buy it gradually in stages on the way down, just in case we keep getting hit. I have to wonder why, by the way, Apple didn't buy Livongo. Why didn't they buy it? That's exactly what they need to boost up their revenue stream. You know that service stream that I like so much? That same day, we got another digital IPO. It's called Health Catalyst. Here's a cloud-based analytics software company that serves healthcare providers. If you're running, say, a hospital, you're sitting on a treasure trove of data, but far too often they just sit on that information. Health Catalyst gives them the tools they need to analyze their data in order to make better decisions, both on the medical side and on the business side. Basically, they help healthcare providers figure out what really works and what doesn't in the most cost-effective way. Just like Livongo, Health Catalyst has fabulous financials. The company racked up 54% revenue growth last year, which accelerated to 70% in the first quarter of 2019, although it did drop back to 59% in the second quarter. On the other hand, that's better than last year. Unlike Livongo, Health Catalyst is closer to turning a profit. Their margins are moving in the right direction, although they're still losing money for now. Despite the revenue deceleration in the latest quarter, the margins got much, much better. Again, it's easy to see why the IPO priced at 26 and then stock opened at 37.50. Remember, especially with the slowing economy. Over the next week, Health Catalyst surged to just under 46. Then it got hammered along with everything else. 2 days ago, it was trading at 38. I sure wish I had spent some time talking about it then, because that was the perfect moment to buy. Since then, Health Catalyst has come roaring back, including a fabulous 6% run today, bringing the stock back to nearly 43. Feel bad that I didn't push it to you. At these levels, the valuation is practically sane still, though. Health Catalyst trades at less than 6 times next year's sales. I know it sounds expensive, but it's a high-growth company. Using my back-of-the-envelope calculations, well, it's pretty reasonable for a company with 50% plus revenue growth. Can the stock go higher? Sure. But look at the way it's rebounding here. If we get another dip, I would pounce on this one because we know Health Catalyst can come roaring back. We just saw that. I think you buy a little tomorrow. and then hope for a trade war turmoil so you can buy more and get bigger in the position. These healthcare cost containment plays they almost never go out of style, except during a hideous meltdown like the one we seem to have finally come out of the other side. I think they're primed to keep roaring back. And just like we saw today, you can see what happens. These bounce hard. If this is only a temporary reprieve, that just means you can get to buy even more at lower levels. Bottom line, don't let fear blind you to opportunities that are staring you right in the face. Livongo and Health Catalyst both came public with a bang 2 weeks ago. Their stocks exploded higher. Thanks to the hideous sell-off, they pulled back from their highs. If you believe in the healthcare technology space like I do, it's one of the few cohorts that's immunized against worries about a Sanders or Warren administration trying to implement Medicare for all. I think Livongo and Health Catalyst are both worth buying here, so long as you don't buy them all at once. These are two gems. I really like them. Jason in Illinois. Jason.
Mr. Cramer.
Yes.
Booyah from the Windy City.
On your way.
Thank you very much for what you do for us. Real quick, I'm holding positions in Apple, Microsoft, Disney, Bank of America.
Okay.
I'm looking to add another to my portfolio. We've talked about it in the past, but it has fallen on some tough times. What is your opinion of Moderna?
Okay, I liked Moderna, and I met with them and I talked with them, and so far it has not been a productive stock to own. I gotta see some sort of bottom. I like Moderna to come on because boy, they told a good story, but so far the market's not liking that story. So I have to say hold off for now. Let's go to Chris in California. Chris.
Hello, Mr. Cramer. How are you?
Good. How about you?
Thank you for all the valuable information that you shared with us daily.
Thank you.
I'm also a new member of Action Alert recently.
Thank you very much.
My
Good club call coming.
Is Beyond Meat, symbol BYND.
Woo.
I missed the opportunity to buy the stock in May when it went public. The stock price plunged recently after it announced secondary offering. Tyson Food also planning to develop its own line of alternative protein products. Will there be more competition moving forward? Do you think it's still a good growing company to invest?
I think Ethan Brown's doing a great job. Thank you, and thank you for being a member of the club. This is Beyond Meat is still worth $10 billion. That's too much, okay? I think that the company is going to be terrific. It needs to grow into its market cap. Impossible's coming. That's a good company, but it's GMO. I listened to the Tyson conference call. They do too much of a blend of plant and meat. That doesn't work at all. But this company just did a 3.2 million share secondary, and the stock is very heavy. I want you to wait. It's going to come in, I believe. Let's go to David in California, please. David.
Hi, booyah from Central Coast of California, Jim, and thanks so much for what you do.
Oh, thank you. I love where you live. What's up?
Jumia Technology, called the Amazon of Africa, went public on April 12th at $14.50. The range of the stock's been $12.60 to $49.77. It closed today down 22 cents at $13.24. What's your opinion of Jumia Technology?
David, I analyzed this thing when it popped at the beginning. Went all the way up, it doubled, and I came to the conclusion that it's uninvestable. We can't figure out what the heck is going on with it, so therefore I cannot recommend it. And I do want to emphasize that it is dicey, like Beyond Meat and like Moderna. All three questioners were talking about very speculative situations. Don't let fear blind you to opportunities. Livongo and Health Catalyst are two gems worth buying here. Still more Mad Money ahead. Five9 has come back with a vengeance. Is it time to get your head in the cloud? Cloud Five9 I'm talking about. I'm going to go one-on-one with the CEO to find out. Then some countries have become as hazardous to a company's health as you can get. I'm taking a look at the last brick standing. And all your calls rapid fire in tonight's edition of the Lightning Round. So stick with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.